won't stop till I hear him say,
Warning: the information that we convey in these videos and the content on this page simply provides general consumer information. It is not legal advice or regulatory guidance. It is not intended to sway your personal bias in any way. We are simply just relaying information already available to the general public. We highly suggest you do your own research and draft your own opinion on the topics disclosed in this video breakdown. Without further ado, sit back, relax, enjoy this video breakdown, and if you're not already subscribed to the YouTube channel, consider doing so now. This is very specific, okay? You do not see any other trading groups doing this. Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. In today's video breakdown, we have a very intuitive, fundamental, and technical analysis deep dive on a cross pair that we trade here at CYPRX, GBP-JPY. I'm going to show you guys all of the screenshots that I sent to the students, giving them a technical analysis breakdown and fundamental analysis breakdown way in advance before the trade played out. I'm also going to go into the fundamentals of things and how I was able to piece together the whole entire trade analysis from top down. Then we're going to go into higher time frame analysis and correlation with lower time frame in extreme detail on how I was able to correlate a trade idea to send to the students to play out now an over 100 pip trade move in profit. Blessings to you guys all. As always, if you're interested in learning more about our technical analysis strategy, the link is in the description down below. You guys can always reach out to me, schedule a Zoom call. The email is also in the link in the description down below. We would love to have highly motivated individuals on our trading team here at CYPRX. Blessings to you guys. I hope that you guys enjoy this intuitive deep dive breakdown. With that being said, sit back, relax, smash that thumbs up button, subscribe to the YouTube channel, and let's get started. I'm going to show you guys a deep analytical dive on a move that we called out ahead of time here at CYPRX to the T. Everything fundamental wise that I was looking at that led me up to the trade and the ideology behind the move, which is currently floating in profit as of right now. Showing you guys how I piece together fundamentals. I told you guys multiple times that I read articles before I go to bed, and in the morning when I wake up. Last night, I was looking at London session. I haven't slept since then. I have some interesting questions. Asaf's here. I'm going to answer one of his questions. One of his questions was, how did I get my specific targets that I sent to you guys ahead of time? So we're going to go into detailistic perspective on that. We're going to cover some fundamentals just to show you guys how I was piecing together the fundamentals to give me the technical analysis advantage that I needed to get a higher time frame directional bias for the best risk to reward. So we're going to go into detail with all that. And then I'm going to also read some of the messages that I sent to you guys via the Discord, just so that way people that aren't part of this community can see, you know, how accurate we are here at CYPRX and what potential they could have as individuals moving forward by joining our community, right? Where to start? Let's start off just by going over some of the messages that I sent to you guys real fast. So I'll go ahead and I'll screen share with you. Hey, you guys can see these are some of the screenshots from the chat that I sent to the GBP-JPY chat. For the majority of us here at CYPRX, we trade a forex pair called GBP-JPY. But so I said to you guys, this is specifically, all right, the times that I send these messages to you guys is extremely specific. You guys know that I do not send my analysis to you guys unless I'm like 95% sure that what I'm sending to you guys in the form of information and trade analytics is going to play out. So I said to you guys at 9:19 p.m., that's here in California. That means that this is about 3 hours prior to the open of London session. Okay, so London session here in California opens 12 p.m. or 12 a.m. Pacific Standard Time. That's 8 a.m. GMT time. Okay. So I said to you all, GBP-JPY bullish targets are 166, 167, and you guys know that I'm a higher time frame analytical trader. So any price targets that I give you guys, I get those off of the 15-minute to the hourly time frame. Okay. I said to you all also that I am bullish above 162.162500. I said I'm hoping for higher time frame pullbacks that would provide the best risk to reward. However, buy scalps for now are still on the table, which we'll go into when we dive into the charts. And I said that if you decide to take sells, be careful by moving your stops to break even and even taking profit. All right. I also gave you guys some tips based off of fundamentals that I'll go over in just 1 second. I said risk on mood, Risk on assets are temporarily pumping. That means stocks, the cryptocurrency market, tech stocks, oil, things of that nature, gold, right, silver. They were all pumping last night during London session. Bank of England expressed its willingness, and excuse me, they're still currently pumping now during New York session. But Bank of England expressed its willingness to buy long-dated gilts. So we're going to go over that as well. We also see the divergence from the Bank of England and the Bank of Japan. We know that the Bank of Japan is still holding a dovish monetary policy stance, or they're easing their monetary policy stance, right? We see that the Japanese economy continues its dovish stance by buying Japanese government bonds. So I said to you guys, Japan continues its dovish stance, but be on your toes, because if they announce Japanese government bond buying by stimulating the economy, you all know that that will temporarily drive strength to the Japanese yen. So I said that here in note number 3, and we're going to go into details about that. When they announced last night during London session that they're buying Japanese government bonds, which solidifies the sell-off that we experienced last night during London session, I'm going to correlate that with the charts. And I said, currently higher time frame is bullish above 162. I'm looking for intraday longs into 166, 167. I'm currently holding a position, and I know that many of you guys are as well. So we'll go into some of those entries on the lower time frame after we solidify the fundamentals. We solidify the higher time frame bias leading up to the lower time frame entries. And then last but not least, we'll get into the fractal nature of things. We'll jump down to the 5-minute and the 1-minute chart, and we'll go into our entry criteria. Okay. And then last but not least, at 9:34 p.m., roughly about 10 minutes after I sent this message, I said my purple lines are my higher time frame levels. This would be the best higher time frame pullback to a buy scenario. If this plays out, I will be a buyer. And I said, I feel a pullback is due. However, the higher time frame is bullish. So it is possible that GJ bullish momentum will continue with no pullback. So be mindful, trade with what you think will give you the best risk to reward for the current session that you are trading, not financial advice. So if you guys go to the screenshot that I sent you guys, this is the original screenshot. And I sent you guys 3 levels to be mindful of: the 164.850 level, the 16400 level, and the 16300 level. Okay. Then I also said to you guys, this is very specific. Okay. You do not see any other trading groups doing this. Me, Justin, Zach, these are all things in the CYPRX 3.0 content that I'm going to go into detailistic perspectives when I make the course content for you guys about time specifications. Okay. So I said to you guys right here, GJ eyes on 2 a.m. to 3 a.m. A move will happen. And I said, we need to break the 8,500 level. And I mentioned to you guys in a later message that if we fail to break the 8,500 level, we're going to sell off. I'm going to go into time specifications on when the Japanese economy announced last night at 2:18 a.m. specifically that they're going to be buying Japanese government bonds, which created that sell pressure on the Great British Pound against the Japanese yen. So we're going to go into detail on the fundamentals. I'm going to highlight times for you guys. We're going to piece all that together. Okay. And now you guys can see this was what we woke up to this morning, all right, for New York session. So we saw price melted straight through the area number 1. And coming into New York session, we saw that price was respecting the 163. And since then, I will now share my screen with you guys on the trade. All right, you guys can see that this is where we're currently at. All right, so this is the position that we're currently floating in. You guys can see that the market melted straight into our area number 2, and we were able to catch buy positions here. I'd mentioned to you guys when price was all the way up here. If I go ahead and I hit rewind, okay, this is where price was when I sent you guys the screenshot with the areas of interest last night on the charts, telling you guys that we are expecting a pullback into area either 1 or 2 on GBP JPY. So now you guys can see, again, putting out messages ahead of the time, how accurate we are here at CYPRX. I'm going to go into detailistic perspectives on how we were able to get these areas 1 and 2. But before we do that, let's cover all the fundamentals that gave me an edge in the market. Again, we are not fundamental analysis here at CYPRX. We're algorithmic technical analysts. Okay, that means that we trade based off of a specific session, based off of a specific pattern, and then based off of a specific time, avoiding manipulation in the market and paying attention to our risk to reward ratios. Okay, that's what we are predominantly here at CYPRX. But as traders in these financial markets, we need to understand that however we can give ourselves an edge in the market without crowding ourselves with too much technical analysis, that's our best option. That's our best bet, right? We don't pay attention to retail methodologies, order blocks, trend lines, support resistance here at CYPRX, but we can piece together the macro environment to give us an edge in the market. So I'll start with that here. All right, just some interesting highlights from some of the articles that I read. And again, I have no extreme or advanced fundamental analysis websites that I use. You guys have access to all the websites that I use. fxstreet.com is the one majorly that I read right before bed and in the morning when I wake up right before I trade. So this is the first article that I saw that I gave some highlights on as to how I created an edge for myself in the market to give you guys that analysis ahead of time. So if you pay attention to when I sent that analysis out to you guys, I sent it out at roughly around 9 p.m. Pacific Standard Time. So that was back up here when the markets were high. Okay. And I told you we were expecting that pullback. So let's go over to the fundamentals and piece this together. We see a highlight right here. It says UK Finance Minister Kwasi confirmed that his government will not go ahead with the plan to scrape 45% rate of income tax. This helps ease the concerns about the UK's ballooning public debt and provides a goodish lift to the British pound. So this is the first mention right here, okay, a goodish lift to the British pound via fundamentals that the market is still temporarily bullish. Apart from this, the prevalent selling bias around the Japanese yen acts as a tailwind for the Great British Pound. So we know already that the Japanese economy or the Bank of Japan is dovish. Okay, so that acts as a support for the cross pair Great British Pound against the Japanese yen, right? If the yen is bearish, meaning that the Bank of Japan is dovish, okay, or they're easing their economy, what does that mean for the Great British Pound? It means that the cross pair is going to go up in value. It's going to appreciate if the yen is depreciating in value, right? Okay, kind of common sense there. Another interesting highlight is we see, furthermore, as Japan's finance minister, I'm not going to butcher this one, Suzuki, said on Monday that the government stands ready to intervene in the currency markets to prevent deeper losses in the domestic currency. So right here, you guys can see, okay, this article came out a day ago. And if you guys saw the highlight that I sent to you guys, I said, be careful because the Japanese yen, okay, the Bank of Japan could start to stimulate the economy by buying government bonds. This is how I got that tip right here. It says, on Monday, the government stands ready to intervene in the currency markets to prevent a deeper loss. How do they prevent deeper losses? They quantitatively ease their economy, right? They stimulate their economy by buying government bonds. This, along with the prevalent cautious market mood, might continue to offer some support to the safe haven yen and cap any meaningful gains for the Great British Pound cross. So this is how I accumulated the ideology that we could potentially see a pullback, especially if we see the Bank of Japan buy government bonds. Okay. That being said, a big divergence in the monetary policy stance adopted by the Bank of Japan and other major central banks should keep a lid on the Japanese yen. This in turn favors bullish traders and supports prospects for a further appreciating move for the Great British Pound cross. Hence, any meaningful downfall could still be seen as a buying opportunity. So you guys see here how the fundamentals literally say that we could see temporary strength in the Japanese yen if the government starts to stimulate the economy, but the overall bias is still bullish. Okay, so that's what I pieced together via this fundamental. Okay, now coming over here, you guys are going to see it all start to fall together, especially when I get to this last article. Okay, here are some key highlights from this one. We see, furthermore, the Bank of England reaffirmed its willingness to buy up 5 billion euros of, or sorry, excuse me, 5 billion euros of long dated gilts, which continues to act as the tailwind for the British pound. So again, we see, okay, a hawkish monetary stance from the Bank of England. We also see them buying government bonds, okay, which is going to do what? They're intervening with the fall of the economy. They're stimulating the economy. Okay, so that's going to temporarily boost the Great British Pound. The Japanese yen, on the other hand, is undermined by the dovish adopted stance by the Bank of Japan. So here we see that word dovish. Okay, remember, we see hawkish. Okay, that means they're raising interest rates, they're hiking interest rates. Okay, and then dovish, right? They're easing their monetary policy. They're stimulating the economy because their economy is horrible right now, which marks a big divergence in comparison to other major central banks, along with the risk on impulse. So I highlighted this, guys and gals. Why? Because if there is a risk on mood, remember in the highlight that I sent you guys in the message, okay, check this out. I said right here, all right, there's a risk on mood right now in the market, okay, right here, risk on market mood. What does that mean? People like to buy the Great British Pound. It is a risk on asset, whereas vice versa, okay, the Japanese yen is a safe haven asset. So if the market mood is risk on, that most likely means you're going to see an impulsive move or bullish moves, bullish continuational moves on the Great British Pound against the Japanese yen. Okay, so that weighed on the cross pair. Then we also see Japan's finance minister Suzuki, meanwhile, said on Monday that the country stands ready to take divisive actions to the foreign exchange market if excessive yen moves persist. This in turn helps limit losses for the Japanese yen. So this is where they were confirming that the Bank of Japan could buy government bonds. Okay, and then so if we go over here, look at this article. All right, this is the most interesting part. Remember, I said to you guys in the message, we come over here again just to be specific on what I'm saying to you all. Check this out. Okay, I said right here in this message to you guys, at 2 a.m. to 3 a.m., we're going to see a market move. We'll look at the market move that took place on the Great British Pound against the Japanese yen. It was a sell-off. Okay, so right here, during London session, when the market sold off, I've told you guys multiple times that if you see a fundamental come out where the Bank of Japan announces that they are buying Japanese government bonds, the market will sell off temporarily. Because why? That is the Bank of Japan temporarily stimulating the economy, which will temporarily give bullish pressure to the yen. Okay, if they're buying government bonds, it's going to temporarily boost the yen, which in turn is going to create sell pressure on the cross pair against the Great British Pound. Okay, so if we see, look at this article, look at the time that this came out. This came out at 2:18 a.m. my time here in California. And I told you guys that there was going to be a move at 2 to 3. This article came out at 2:18 a.m., as you guys can see. And it says right here, the Bank of Japan announced on Wednesday that it offers to purchase Japanese government bonds. Interesting, right? To say the least. That's exactly when the market sold off. Okay, you guys can see right here, that's when they announced that to the general public. That's when sell pressure picked up. Why? Because the Japanese yen temporarily gained strength because of the Japanese government bond buying. Okay, last but not least, just to solidify that the Bank of Japan still has an ultra loose monetary policy. So that means a divergence, temporary strength in the Great British Pound, temporary weakness in the yen. Okay, we see right here, Bank of Japan keeps ultra loose dovish policy bias intact. All right. So now that you guys have that full entire fundamental analysis, again, that's everything that I had in my arsenal via fundamentals, okay, to solidify the technicals that I was teaching you guys, that we are going to see an overbought scenario. Okay, so remember, the bankers, they're not going to buy from highs. They're not just going to keep buying and buying and buying. What they're going to do is they're going to give the market a reason to sell off. Okay, you guys can see how now the fundamentals come into play with the technicals. The Bank of Japan announced right here that they're buying government bonds to sell off, and now they take buys from a discount. So let's get into a perspective as to how you could have potentially caught these sell scalps to the downside, how you could have avoided buying at a high by doing some simple technical analysis over to the left-hand side, and identifying that there were equal highs here and the market failed to break structure or create a new market structure high, and instead was wicking through liquidity to turn around and present higher time frame discount buying opportunities. Okay, so right here in this area, you guys can see that coming into this London session and into this New York session, all right, how could you have avoided buying at a high during this London session? I even told you guys right here, this is where I sent that message out at roughly around 9 p.m. that there are going to be temporary buy scalps. However, we are expecting a higher time frame pullback. This is where I sent that message out to you guys right here when price was roughly in this area. And as you can see, we see temporary buy scalps and a higher time frame pullback. Okay, just to show you guys again that we put our money where our mouth is here. Okay, so with that being said, you guys can see that there were equal highs over here, or early sellers, premature sellers in the market. Here is a double top or M formation where retail traders are hedging over leveraged positions, or they're opening over leveraged positions here. The market makers, before they sell off, before they make their move, they come back for that retail liquidity. Okay, London session targets that liquidity. But now let's pay attention to 15-minute structure. 15-minute structure fails to create a candlestick body close above the equal high. So you guys can see here how this wick immediately wicked through anybody's stop losses who were above these highs. We failed to create another leg higher, and then the market rejected major psychological levels. We have a 500 right here that we failed to close bullish above. So you guys could have identified that. Here at CYPRX, we pay attention to major and minor psychological levels, a major being our 500. You guys can see that there. That could have been a catalyst to determine that the market was not going to flip bullish. Why? Because I teach you guys that if we reject a major psychological level and match bearish momentum from the bullish momentum that wick through liquidity, and we fail to create a new high after that and instead create a lower low, that is a sign of a reversal, or that the market makers have an interest in grabbing liquidity above highs and making new lows. Okay, so you guys can see here exactly that. The market wicked above highs, showing us an interest to run stop losses that were above these early sellers or these retail traders. And then they created new market structure lows. You guys can see this is a 15-minute structure. Here's that 850 psychological level that I mentioned that we need to break to see any type of bullish pressure. We failed to break that. We broke below it, created a new market structure low, and created a new lower high underneath of that and continued down. It's just significant enough that that is exactly when the Bank of Japan announced the Japanese government bond buying, roughly in that area from 2 to 3 a.m. that I mentioned to you guys. There was going to be a move on the Great British Pound against the Japanese yen. I even asked you guys, I know for a fact that there were some people that caught the sell positions in the chat. So kudos to you for seeing that. Hopefully those were your confluences, right? A rejection of a psychological level major, a wick through liquidity, a break in market structure, entering in on a pullback, right? For sell positions or sell scalps. Okay, moving on. To answer one of Asaf's questions, Asaf is one of our traders here at CYPRX. He asked the question, Cypress, how did you get your purple lines identifying to us where the market reversal could be on the higher time frame for bullish scenarios? Okay, so deleting this real fast and deleting this 2 a.m. window. Now that we've covered that, just to clear up the charts a little bit, we can clear all this, clear all that. Okay, when I sent you guys the screenshot, this is where the market was. So when Asaf asked me that question, okay, these are the areas of interest that I sent to you guys where we could get a bullish reaction from. So how did I get this? We're going to utilize our advanced tracking method. Okay. We're going to go into detail on what you need to be doing to track the levels from where banking institutions bought from previously during other sessions. Okay. We know that during current sessions or current market sessions, for example, if we're trading New York session, that the majority of times the banking institutions are going to seek to buy from a discount from where they bought from previous days. Now, that's not always going to be at the same session. So New York session is not always going to buy from the previous New York session. You have to monitor the price action from the previous day's low. Okay. So as you guys can see, we are printing bullish order flow on the higher time frame. From a daily perspective, you guys can see from Asia session to Asia session every single day, we are making new higher lows. So here, starting here, just to solidify a bullish order flow, okay, from day to day to day, we are making new daily lows and new daily highs. Okay, so here you guys can see the daily low came in right here at 159,500. That was the daily low for this day. And then the market coming over here made a new daily high. The next day started here during Asia session. We dropped and wicked beneath lows again. So here's the same pattern. You guys can see the market is wicking beneath lows, showing us a willingness to grab stop losses beneath lows and make new market structure highs. Same thing here. When the next day starts, the market is wicking beneath lows and making new daily highs. So now coming into the next day, you guys can see that we are respecting bullish order flow, higher highs, higher lows. Okay, cool. So again, same thing, just to solidify, look at this. This is now a new day's worth of price action, okay? And we see the market showing us the same pattern, the willingness to grab liquidity beneath lows and make new highs. So we are respecting daily bullish order flow, right? Until the market breaks these daily levels, we are in higher time frame bullish scenarios or buy scenarios. That's one identification via technicals that we can solidify buy scenarios, okay? Now, how did I get these areas 1 and 2? To go into extreme tracking methodologies, we're going to be paying attention to the New York session after the market broke market structure. So where did New York session buy from the previous 2 days that led to 15-minute structure breakage? Okay, so area number 1, how did I get that? Okay, again, advanced tracking. We're looking at the lowest level that New York session bought from the previous day that led to a 15-minute market break in structure. As you guys can see, here's the New York session open. Here's the lowest level that New York session bought from that led to a market break in structure. So you guys can see the price action broke market structure. So this would be the first area, okay, that the market makers bought price from. How do we know that this is the market makers buying price? Because retail traders do not have the amount of money or the amount of capital to move the market impulsively to the upside like this. We just don't. It doesn't even matter if every single retail trader in the world bought price at the same exact time, which is collectively speaking impossible. we still couldn't move the market. So that means that trillions of dollars, remember, $6 trillion on a day-to-day basis, move through this market. Trillions of dollars are pumping through this market right now, moving this market to the upside. You guys can see this is the first institutional area where the market makers move price to create a new structure high. Okay. Then the market pulls back. It creates a higher low that leads to a new market structure higher high. So you guys can see here over to the left-hand side, we have another market structure break. So if we're paying attention to structure, these are the two areas. Here's the grab of liquidity prior to the New York session. Here's the higher low after the grab of liquidity. So that's the first area that leads to a higher high. We get a pullback, higher low, that leads to a higher high. So these are the two lowest institutionalized levels that the New York session prior to the one that we're operating in bought price action from. So we're going to take our candlestick, or sorry, excuse me, we're going to take our box tool, highlight from the candlestick down to the body, or from the candlestick wick to the body, highlight that area and extend it over to the right-hand side to get our area of interest where the session that we're currently operating in could potentially buy from. Now, to clear up my charts a little bit and to give you guys an estimation of where price could buy from, I rounded that off to the 164.00 psychological level and marked that off as area number 1. Okay. So Asaf, to answer your question, that's how I got area number 1. Okay. I could have given you guys a whole bunch of lines with boxes on it and whatnot, but area number 1, that is how I got it. That was the first institutionalized level after the market makers grabbed liquidity beneath lows, okay, and made new structure highs where the banks bought from after the wick of liquidity. Remember, this is a manipulation move, so it doesn't realistically count. This bearish pressure was a move by the major banking institutions to liquidate any people that were trading leverage here prematurely who have less money than the big players, okay? The big players can see everybody's orders. They can see all the smaller institutions and all the retail traders that were buying up price here. They come, they hunt those orders, they make a higher low, New York session opens, and then they buy price, okay? So that's the first area, right? So that's how I got area number 1. Area number 2, if we backtrack price action, just utilizing the same methodology, we're gonna go back to a previous New York session, okay? And we're gonna use the same method. So here, prior to the New York session, again, you guys can see the market makers grabbing internal liquidity. So here's that same pattern. We see lows on the lower time frame. These will be 5-minute and 1-minute lows. The market makers wick through those areas, match bullish pressure with bearish momentum, and start to create higher highs and higher low formations. So New York session opens. Here's the first higher low area that leads to a market break in structure. Remember, the market makers are the only people with the amount of money to move price to create bullish order flow. So when you see that, that is the directional bias that the market makers are trading in. You guys can see this is the first institutionalized area where the market makers pump enough liquidity into the market to break a previous market structure. They even retest that to get a second buying opportunity that leads to a second market break in structure. Okay. Now, again, we know that banking institutions like to take multiple buy positions. So here they took a buy scenario from one area, they pulled price back, and here's their second buying opportunity. I've told you guys multiple times that during every single session, there's usually 2 major moves where banking institutions inject liquidity into the market. So here was the first one. Then the market pulls back. Again, we're looking for an area where the market pulled back to respect bullish order flow and create a higher low, higher high formation, because that is most likely where the banking institutions will buy from at a discount during later dates. So here you guys can see the market pulls back, breaks a previous market structure. Where did that market impulsive move come from? Roughly right here at the 163 psychological level. So I marked that off for you guys as area number 2. Okay. All right, Asaf, so that's to answer your question, how we got those institutionalized levels that the banks could operate from during current New York sessions. And as you guys could see, extending that over to the right-hand side, the 163.00 psychological level, the banking institutions during this New York session literally just bought from a discount from where they bought from the previous days. Okay, so if they were buying from this low, taking our Fibonacci, again, how to properly draw your Fibonacci tool on, it's the higher low that leads to a market break in structure, all the way up to the new higher time frame high. You guys can see that the banking institutions during this New York session were just buying roughly at around an 80% discount from when they bought from the previous day. Okay, now that you guys can see that play out, right? So deleting that just to answer Asaf's question, all right? Now we'll go into the lower time frame. Okay, now that we see the market respect this New York sessions buy position from the previous day in area number 2 that I sent you guys in the chat again, okay, just to solidify what I said to you guys. All right, let's go over the screenshots one more time. I mentioned to you guys a higher time frame pullback. Then I said to you all, purple lines are my higher time frame levels. This would be the best higher time frame pullback to a buy scenario. If this plays out, I will be a buyer, and that I am bullish above 162.00. Okay, my higher time frame targets are 16600. Now, I'm not a swing trader, so obviously, of course, I'm going to be taking profit. Okay, I'm going to be taking profit. I've already taken about 70% off of my trade. My stops are moved to break even, and I'm going to let the rest of the trade run to potential higher time frame targets. But just know that it's going to take multiple days for GJ to get to these levels if they come into fruition. Whenever I send these targets to you guys, it's not just going to happen overnight, right? Like everybody thinks. It's going to take maybe now until Friday, right? Today's Wednesday. It might take 2 more days or maybe following into next week's price action for these levels to come into fruition. These are levels for you guys to be mindful of and to pay attention to, okay? Now, I also said to you guys specifically, okay, the 2 a.m. to 3 a.m. move, that could have helped you guys out potentially. Coming back over here, now to solidify the lower time frame entry. I entered off this position off of a buy stop. I saw multiple other traders in the GJ chat catch this move as well. So kudos to you guys, absolutely phenomenal. We're going to jump down to the 5-minute chart, okay? How was I able to scalp this position on the lower time frame? So let's talk about confluences. Number 1, we know that the higher time frame is bullish, okay? Number 2, we see early buyers prior to the New York session in the manipulation window and early sellers. So here you guys can see prior to the New York session open, we have early buyers. This is a solidification, meaning the higher time frame, we already know that this was our area of interest, the 16300 level, and this blue box was our area of interest for the market to drop down into. We'll look at where price action was when the New York session opened, okay? This is a solidification for you as a CYPRX trader to say, I'm going to sit on my hands and be patient. I even told you guys in the text, wait for the best risk to reward ratio on the higher time frame. Well, if this blue box is where the previous higher time frame, i.e. the 15-minute chart, bought from the previous New York session, it would be in your best interest to sit on your hands and wait for the market to drop lower in price so you get the best bang for your buck, right? You're not chasing market bottoms. You're not guessing market bottoms. You're buying price off of the best risk to reward ratio for the higher time frame, okay? So as you guys can see, we have early buyers and early sell scenarios for potential bullish targets if the market flips bullish, which is what I'm currently targeting now, okay? Who are chasing the bearish pressure from London session. So they're selling late. They're also buying prematurely, right? So there's liquidity above highs and liquidity beneath lows. You guys can see that when New York session opened, they immediately attacked all of the early buyers and they dropped straight down into our higher time frame target. So as soon as that happened, I then jumped down to the 1-minute chart to say to myself, what are some psychological levels that we could see the market reject and start to accumulate more fractal structure by confluences? So now we'll jump down to the 1-minute chart, okay, to get into the entry. So again, major psychological levels we see coming up, a 162.800 level, which falls in between our 163 psych level, the area number 2 that I mentioned to you guys, and the higher time frame area, i.e. the blue box that we dragged over from the left-hand side where banking institutions bought from the previous New York session as a confluence to say, as long as price holds above these levels, the blue box from where banking institutions bought from the previous New York session and psychological levels on the fractal nature, and we start to see bullish order flow, that means, okay, what are we looking for now fractally? Remember I told you guys, okay, let me just draw this out so everybody has a sound like analysis. I really need you guys to understand. Okay, 15-minute structure. What are we looking for? Bullish order flow. That means higher high, higher low, higher high, higher low. 15-minute structure, we're identifying high value targets, okay, that we can seek to be buyers over here to the left hand, or sorry, excuse me, yep, to the right hand side in the future, okay? That's what we're looking for. We're looking to be higher time frame buyers when the market depreciates in value and comes back to higher time frame areas of interest. Once that happens, again, over here to the left-hand side, these are 15-minute areas of interest. Once the market comes into these areas, okay, Then we can jump down to the lower time frame. So now that the higher time frame has come down into our area of interest, what are we looking for on the 5-minute chart and the 1-minute chart? What pattern are we looking for? We're looking for a low to be established, a pre-engineered low. We're looking for a market maker move into that low. We're then looking for a match of momentum that either leads to a break in market structure or a match of the bearish momentum that swept a low. And then we're looking for the market to sustain a higher low, higher high, higher low, higher high formation. That's what we're looking for on the fractal nature. And this is after the market comes to our area of interest. Remember, we're not chasing the market. We're not chasing the market in these candlesticks and these candlesticks. We're not, hopefully, I mean, I know I saw some people sell from the lower high that was created here during London session. That's fine if you're taking profit, like I mentioned, okay? But remember, the higher time frame is bullish. So when the market comes into our higher time frame areas of interest, fractally, this is the pattern that we're looking for. So let's go down to our area. Okay, again, remember, 15-minute structure came into our higher time frame area. Now we're looking for that sniper entry. We can go ahead and you can jump down to the lower time frame, i.e. the 5-minute or the 1-minute. Personally, I like to enter on the 1-minute. Other people like Ezra, I know I've seen other people talk about not jumping down to the 1-minute. It's too manipulative for them. Jamie, I think, even mentioned that he doesn't like the 1-minute because it's too manipulative, right? It's okay if you don't like the 1-minute, but remember, that's going to get you that sniper entry. Okay, so here you guys can see right at the 162,800 major psychological level, here's the low that was established. Okay, here's a bearish move. And now we have to see if the market continues bearish order flow, what pattern are we going to get? We're going to get lower low, lower high, lower low, lower high formations. So this is what you're saying to yourself to continue down. This is the pattern that we would need to get. We'll look at what happens. Okay. The market violates a low right there. So here's the pre-engineered low. And instead of creating a lower high, lower low, lower high formation, what does the market do, ladies and gentlemen? It matches bullish momentum. Okay, so check this out. Zooming in, the market fails to create a lower low, lower high formation. I'll delete this now. And instead, it creates a higher low. Okay, so you guys can see, look at the candlestick body closes. All right, here's a 600 level. The market wicks through liquidity. It matches with bullish momentum. It pulls back. It fails to create a lower low. Right here is the signal. Okay, right here is the signal. The market failed to create a lower low. Remember, higher time frames bullish. We're in a higher time frame area of interest. And our key indicator is what? The market failing to create a lower low and instead creating a higher low. It does that right here. That's your signal. Boom, right there. I pulled the trigger. I put a buy stop right above highs. Okay. So just to solidify a bullish reversal, my buy stop was right above this high wick. You guys can see the market entered me in for a buy position. Not only that, but we retested the 800 level. Okay. Again, this is a major. Look at this. This wick right here, retest the 800 level to the T, and the market continues with bullish pressure and completely matches this entire bearish leg. So you guys can see here how this was a manipulative low pre-engineered in the market to solidify what I'm teaching you guys, that the market makers must make money off of early or premature investors before they make their move. They attack that liquidity. They then show us a signal that they don't want to push the market any lower. And then they reject psychological levels, i.e. we're keeping in mind at the same time, okay, that this entire bearish move was created in between 2 a.m. and 3 a.m. Why? Because the Japanese bought JGBs. So again, risk on mood, higher time frame area of interest, fractal structure, confluences. Okay, you guys can see rejection of psychological levels, sound risk to reward on the higher time frame, and this is exactly how the trade played out. Okay, absolutely phenomenal. Sent it to you guys ahead of the time. All right, we're currently, I believe it was like 45 pips in profit is where I took my first take profit at. I'm sure that the majority of CYPRX traders here were able to see that. If you guys aren't a CYPRX trader, hopefully this gives you an insight on how intuitive we are here at CYPRX and how piecing together fundamentals, piecing together technical analysis from the macro and the micro perspective gives us an edge in the market to solidify proper risk to reward trades, to take positions in the FX market, which is the most liquid market on the world. I'm telling you guys right now, if you're not a part of CYPRX or you are a part of CYPRX, we are going to be one of the nastiest trading teams on the face of this earth. As you guys have seen, There's no indicators on my charts. The only indicator that I have right now highlighted on my charts is straight session splits. Everything else is time, algorithmic patterns in the market via institutionalized liquidity, psychological levels, and specific key areas of interest, which we identify here at CYPRX to react to give us the best risk to reward ratio. That is how you should be trading the markets, whether it's crypto, commodities, or forex, or maybe even stocks. You should not be trading based off of some indicator. You should not be trading based off of some Fibonacci Moonboy sequence number. Okay. Learn how to trade these markets properly. And I'm telling you guys, it does take time. This is 7 years in the market in the making for me. Okay. But when you can really start to piece it together, it is insane what you can accomplish. I mean, look at this. This is over 100 pips in the market call on this move alone. That is insane to do. It's insane to do, and it's not hard to do. Okay, you guys see how I piece everything together? Me and the other mentor here at CYPRX tried to give you guys a tip about the 2 a.m. Japanese government bond buying, which created sell pressure. You guys can see that news came out at 2:18 a.m. I gave you guys the tip about an hour in advance. You guys can see the ultra loose monetary dovish policy, which gives us temporary bearish pressure. Okay, that means higher time frame pullbacks to buy scenarios. Again, piecing it all together for you guys. Okay, with that being said, thank you all so much for tuning in. I hope that you guys enjoyed that intuitive video breakdown. I hope that you all were able to take a piece of information and hopefully implement it into your trading regime. Nothing that we constitute here is financial advice. We're simply here just showing everybody that we put our money where our mouth is, giving our students technical analysis ahead of the curve way in advance before the move actually plays out, showing you guys how intuitive our research and our technical analysis is here at CYPRX and how it plays out in the live market. Blessings to you guys all. If you guys enjoyed this video breakdown, make sure that you subscribe to the YouTube channel, give this video a thumbs up to help boost that YouTube algorithm. If anybody's interested on following us on Twitter, where we announced that we were going to be having a public Zoom call breakdown on GBP JPY again, that link is in the description down below. For anybody that is interested in the CYPRX mentorship, that link is also in the description down below. You guys can reach out to me at any given time throughout the week via the customer support email that is also in the link in the description down below. Schedule a Zoom call with me. I'll hop on a call with you. We'll talk about what to expect in the CYPRX mentorship program. Blessings to you guys all. As always, please and thank you. Be cognizant, be aware, and I'll see you guys in the next YouTube video breakdown.
Won't stop till I hear him say, won't stop till I hear him say.